Good morning and welcome to another episode of Not Your Money. In this episode, we'll be debunking stablecoins with an expert in the field who will help us understand them, think about what is out there, how they differentiate, introduce concepts of taxonomy, help us understand the market, and also expose some of the problems in this space and some solutions to help rectify and improve this whole facet of crypto assets. So without further ado, let me introduce you to our guest, Christophe Lebrun. Christophe, welcome to the show. It's great to have you on.
Hello, Francesco. I'm really glad to be there with you to answer all your questions.
Fantastic. So Christophe, let's start with an introduction. Who is Christophe Lebrun? Help us put you on the map.
Okay, so I am a data scientist and I am a scientific advisor at HEG Geneva. At HEG Geneva, I am teaching and I am making research mainly on Web3, smart contracts, and blockchain. I'm also a founder of CyberGold, which is a decentralized stablecoin back to gold. So I am working at HEG since several years, and as I said, my main field of research nowadays is blockchain and DeFi especially.
Fantastic. So a real expert in this space. I look forward to learning a lot from you. So let's start with a very, very simple question, Christophe. What is a stablecoin? Let's start with the basics.
Okay, this is a simple question, and I will have a simple answer as well. It's a cryptocurrency, a particular type of cryptocurrency, which is designed to maintain a stable value relative to a specific asset or basket of assets. So usually the most common asset used for the reference is a fiat currency, such as USD. But stablecoins can also be pegged to other assets, such as commodities like gold or other cryptocurrency or baskets or anything. In fact, so this is what are stablecoins.
Perfect. Okay, and maybe do you want to share a little bit, like how important are they? How big are they in the market at this point in time?
Yeah, so maybe we can go back a little bit in the history of stablecoin. The first stablecoin is Tether USDT, who started in early 2014.
So that was the first stablecoin, Christophe, USDT?
Yeah. Actually, USDT was the first one, even if there was the concept of stablecoin was already think about in the crypto community because of the volatility of cryptocurrencies. This was already seen as a problem before that. But actually, yes, Tether was the first one to came with on layer 2 for Bitcoin, the Omni layer protocol, and then a lot of other stablecoin came at the same period, actually, such as BitUSD or NewBit. And then a few years later, there was a DAI stablecoin, which is a decentralized stablecoin. And then with the rise of Decentralized Finance, there was kind of an explosion of stablecoins. And nowadays, there are, in fact, almost hundreds of stablecoins.
Yeah, that's interesting. So we see here on the screen the composition of the market at the moment, as you say. They seem pretty dominated by a few. Maybe on this next graphic we'll see that even clearer in terms of.
Yes, you're right. Even if there is a true diversity in the landscape, the landscape is still very concentrated. Because almost 90% of the market cap of stablecoin is USD pegged. 90% of the market cap of stablecoin is made of what we call centralized stablecoin, but we will discuss that after.
Mhm.
And also, almost 90% of the market is in the hand of the two main actors, USDT, Tether, and USDC,
Yeah.
Circle, and Coinbase.
Uh,
So maybe we can say a word about these two stablecoins. So Tether, we have already spoke about this stablecoin, and USDC was introduced in 2018 by Circle and Coinbase. It's the same model. In fact, it's backed by dollars. Supposedly $1 of reserve for one stablecoin.
So these tokens peg the dollar effectively, and they reserve dollars and real dollars and dollar equivalents, short-term treasuries and the like, certificates of deposit, to issue these tokens. And is there, I mean, just on 2 feet, we will dig into Tether a little later, but what justifies the sort of the dominance of Tether? Just looking at this slide, if I look at the market cap, Tether's 4 times USDC and many more times anything else on this list. And volumes as well. The volumes are 10 times. So everything seems to be backed by Tether, as you suggested earlier.
Yeah, we will discuss a little bit more later about that, but it's mainly the early the fact that it was the first actor in the field, and this created a network effect, and so it's very hard for newcomers, I think, to make a place in the landscape of stablecoins. And also, by the way, USDT is there since more than since 10 years, so it has a track of history of resilience to crisis, even if there was some controversies, but it's here. So I
That's a
guess
good
this
point,
is the main
actually.
reason.
So it's been around for 10 years. As you say, it's been through ups and downs several times. It's seen good and bad markets several times.
Mm-hmm.
And for as much as there has been and still is criticism around its dominance in the market, I suppose a degree of credit is owed to it, as it's stayed there. It's still around, still available, and still supporting the industry by a large extent. But let's move on. So what are they for? What are the main cases for stablecoins? What are they used for?
Okay, so maybe you can go back to what is the primary goal of stablecoin. In fact, it's to combine the benefits of the cryptocurrencies and of blockchain in general, such as decentralization, transparency, security, with the price stability of traditional financial assets. So because of this stability, they can be a stable medium of exchange or a reliable source of value and the unit of account. So here you can recognize the 3 traditional functions
Money.
of money, exactly, according to Aristotle. So because of that, yes, stablecoin can be used as money, while the Bitcoin or Ethereum or other very volatile assets cannot be totally used as money. And because they can be used as money, they are going to be used where the money is required. So for payments and remittances, um, so you can get a low cost and very fast cross-border payments that are not possible yet with the traditional financial system. But also it can help to hedge against the volatility of the other cryptocurrencies, such as Bitcoin. So it can be a way for traders or investors just to hedge against this volatility. We'll see also that it is used a lot in decentralized finance, such as providing trading pairs, for example, double trading pairs.
Very clear and very fascinating. It always amazed me how widely adopted, perhaps against what most people might expect. Crypto assets and stablecoins in particular are in third world countries where stablecoins, crypto dollars, so to speak, can arrive at a click of a finger in ways that real dollars cannot. So making them instant, cheaper, faster, and I suppose started to really put pressure on the current system.
In the money of the digital area, so yeah.
And what about DeFi then? Tell us, how do stablecoins play a role in the DeFi space, in the decentralized finance space?
Yeah, here again, stablecoin play a very crucial role in various applications. Actually, it can be used as a collateral for loans, for example, on a lending and borrowing platform. You are going to use stablecoins as collateral. You can use them for yield farming. So if you have some stablecoin, you can place them on these platforms, DeFi platform, and get a yield for that. So it's like having a bank account creating interest, but usually the yields are higher than in the traditional bank saving accounts. It can be used to provide liquidity to the decentralized exchanges. Also, as we mentioned already, for trading pairs, as they are providing hedging against volatility, but also they remove the need for traders to convert to fiat regularly, and for tax optimization, this kind of stuff. It's interesting to stay in the cryptocurrency ecosystem, let's say. It can be also used for example, for fundraising. If you want to start a company, you will raise funds, and you can do an initial coin offering where you are going to sell your tokens in exchange of cryptocurrencies. But for that, stablecoin are very useful.
Sure. This is not an investment advice channel at all.
Absolutely not.
But I always find it mind-boggling, actually, how you can use a stable coin. And again, as a reminder, stable coins by design are meant not to be speculative assets. They're meant to be safe, stable assets, as the name suggests. But you can place them on a DeFi protocol and earn a hefty return in ways that traditional banking services simply cannot imagine, particularly in low interest rate regimes. And even today, in a 4 to 5% interest rate regime, sort of across the world, we can see multiples of that on a stable coin offered on a peer-to-peer decentralized basis, which is rather incredible.
Yes, you're right. They are already widely used, but I think that in the upcoming years, they are going to be more and more used for different factors, I would say. But there is a potential growth in this field. I think the regulatory clarity that is coming with MiCA regulation in Europe or in Switzerland, we already have a regulation, but maybe in the upcoming years, the US will also adopt a regulation. So with this regulatory clarity, new actors can come in, such as institutions, for example. Also, there is a continuous innovation in this field. We'll speak today about stablecoins, but in every single aspect of the DeFi, there are very, very regular innovation. And so the adoption is also boosted by this innovation. So yeah, I see the market of stablecoin growing in the next years for sure.
Fantastic. So let's dig in a little bit, Christophe. Help us map out the main types. You mentioned USDT, USDC, DAI. We looked at the market, but help us classify, what are we talking about here? What different types of stablecoins exist? Why do we have what we have? Just help us paint out this picture a little bit.
Yes, there are different type of stablecoin, even if the two main stablecoin, USDT and USDC by market share, are actually of the same type of centralized stablecoin. So usually the most used taxonomy distinguish between three types of stablecoins. So the fiat-backed stablecoins, such as USDT, USDC. This is the first type. The second one are the crypto-collateralized stablecoins. The much known is DAI, which does not have a big market share. So you can see that the other categories, except the fiat-backed, are already kind of marginal. And the third category is called algorithmic stablecoins. So what are the differences between these three stablecoins models? Fiat-backed, so usually it's a private company that is going to issue tokens and that will own reserves in USD, for example, and they claim to have in reserve as much dollars in reserve as they are issuing stablecoins. So this is not totally on-chain. It's centralized, and you have a private company making a bridge between the real world and the blockchain. So the crypto-collateralized stablecoin, they're trying to track the value of an asset, such as fiat, but they have reserves that are not in the same asset. They do not own dollars, for example. Even if they track dollars, they will have reserves in other crypto currencies, such as Ether or Bitcoin or something like that. Okay, but the reserves are made of what we call exogenous cryptocurrency, whose price is not related to the one of the stablecoin itself or to the project, the stablecoin project. Whereas the algorithmic stablecoins, such as the well-known Terra Luna, can have reserves, but these reserves are made of endogenous crypto assets, such as Luna for the Terra stablecoin, for example, but this poses a real challenge, as we will see.
Understood. And in terms of market share, they translate rather staggeringly, right? So as we can see,
we can see the concentration that we have already spoken about. So actually, the market is very concentrated around the centralized stablecoin, fiat-collateralized.
You mentioned I guess the reason is the same we covered before. USDT has been around for 10 years. They've been ahead in the market and sort of gaining their market share. But is there more than that, Christophe, in your opinion? Is it?
Yeah, there is. You know, the collapse of Terra Luna was really a big thing in the ecosystem, and because of that, there was a real defiance, I would say, regarding the algorithmic design. And people do not really understand the difference between the crypto-collateralized stablecoin and the algorithmic stablecoin. And because of that, I think there is a misunderstanding, and people are very concerned about algorithmic and decentralized, let's say, stablecoins.
I must say, for my not that technical brain myself, Christophe, sort of conceptualizing what a dollar-based stablecoin is fairly straightforward, provided I can get my head around how that actually physically happens at Tether or with USDC. And you mentioned some of the bridges and some of the opacity in this space, but if you can get your head around, that's quite easy to understand. And it gets harder as you go down this list, right? Algorithmic starts getting quite technical. I think the latest one, what is it? Ethena, one of the last algorithmic stablecoins that have entered the market.
In fact, Ethena is more crypto-collateralized, but it's centralized as well. So even if you say that they are decentralized, it's not really the case. So, but no, they are not really algorithmic. Indeed, the algorithmic stablecoin are almost no more in use.
Okay, that's interesting. Now, you've mentioned centralized, a number of times in your narrative. So let's go one level further. Centralized versus decentralized. Map out what we have today and how you think this market should look like.
Yeah. So this taxonomy that you are showing on the screen right now is a more complex one than the one before, but because of the evolution and diversification of the stablecoin landscape, the previous taxonomy was not enough because we have seen new models, new design emerging, such as the CBDC, central bank digital currencies, that were not part of the classical taxonomy, but also we have a variety of design in the field of decentralized stablecoin. So here on the picture you can see the CDP, the hedging, senior hedging, reversible. So four different design for decentralized stablecoin. So why is decentralization important? I think that the most important thing is about existence of variety for both for individuals and for collectivity. Actually, if you want to hedge against the risk, diversification is really a big thing. And for now, with the market shares of 90% for the two main actors, which both have the same model, we can't. The ecosystem is not diversified, so it poses some kind of systemic risks. So I really trust in diversification, also regarding the governance. I think it's not a bad thing that there exists some centralized solution, but I think that there should exist decentralized solution, and not only with a marginal market share. So
Yeah,
this is my point.
So the market is dominated, as you said a few times, by the centralized stablecoin types, USDT in particular, USDC and others. So CBDCs, as they come in, would fall under this category as well. I'm trying to think. I mean, is that per se a bad thing, or is the question more one of in my head of transparency? Do we understand how they work? Are they? In my head, centralization versus decentralization is often, a widely publicized word. Crypto is decentralized. Actually, in reality, most of it isn't. But is centralization per se a bad thing? If it works well, that might be fine. But I'll take your point on sort of having a wider market, more competition, being able to choose amongst different iterations. So is it right to say that it's probably more question of transparency? Do we understand how these assets work? Are they really pegging? Are they really stable? And maybe a decentralized option might give us more of that. I'm not sure. What is your take?
Yeah, you're right that in fact centralization has its drawbacks. It has its own pros also. We have to recognize, but its drawbacks as well, such as, you're right, opacity in the reserves. So now you have to trust the company that says to you that they own the reserves. For example, USDT does not make a proper audit of reserves. There is no transparency. While for the decentralized stablecoin, everything is on chain and you can check by yourself on any blockchain explorer that they do actually own the reserves that they pretend to have. So transparency is a big thing, but it's not the only one. I mean, with centralization, you come with censorship, for example. Here on the CBDC example, I've put the digital yuan, and by the Republic of China, and this poses a privacy concerns because all information is owned by the government, and it could be the same thing with any centralized stablecoin, especially since they are regulated. They can censor some address and deny your own ownership of your coins. So it's not only about transparency, but also about permissionless and censorship resistance. And,
Well put. Yeah, that's clear.
custodial, let's say.
Yeah, fair point. But are there aside from the market share, but are there concrete examples? Can you, without getting into CyberGold just yet, but are there any existing decentralized stablecoins you think are undervalued? Is there a market for it, and why are they not used more? Well, why do you think that's the case?
Yes, there are. In fact, there are a lot of decentralized stablecoin. Most of them are, as you have guessed, very with very low capitalization, with very low market cap. So most of them are using on the taxonomy that is still showing on the screen on either CDPs or hedging or delta neutral models. So we can quote the DAI, of course, but liquidity USD for CDP, and for hedging based model, we have the kind of new ETHNA USDE stablecoin. So we will see in the next year, because with the rise of ETHNA, which is pretty recent, if it will continue or just stop. I think there is this, there are different points to consider. The complexity of understanding how it works that you already mentioned, the concern about decentralized stablecoins because of the Terra Luna collapse, which is still a big deal. I think these are the two main issues that are facing the decentralized stablecoin.
Sorry, I don't want to overindulge in this space, but it still boggles me to a degree. So if we've had a market for 10 plus years and it's been dominated as far as stablecoins are concerned by Tether, with all the aspects you alluded to, from centralization, transparency, security, privacy, it would feel to me, at least based off where we stand today, that as nice an idea of security, of privacy, the market doesn't seem to have bought into it yet. Is it complexity maybe that's why is that gap?
That's a very good question. Actually, I do not have all the answers, just some guesses. You know, there is still a lot of innovation in the field, but this innovation especially arrived maybe this last year or two last years, because during a long time the main decentralized stablecoin was DAI and the CDP model, and as you can see, the other model, senior age and rebasable, did not work very well at all, and the hedging or delta neutral model is pretty new and promising. I can see the innovation coming from this category, and we will see how it goes. We will see the response of the market.
Okay, Christophe, thank you. So help us compare and contrast between the various. We've touched on it. You've shared the taxonomy here, explained the different types. So help us navigate through the good and the bad of the different stable coins, put one against another.
Yeah, so you can see on the left here of the screen that there are three main criteria that are going to add to create distinction between the stable coins. These three criteria are the governance, so are they centralized or decentralized? Second criteria is their intrinsic value. Where does it derive from? Where does it come from legal recognition, from real world asset backing, from endogenous or exogenous crypto backing? And the last criteria is their mechanism, in fact, the technical design. And here you can see, especially in the decentralized field, that there is a variety of design, but four design are there are mainly four designs. Those who are based on CDPs, those who are based on hedging, senior hedging, and rebaseable. Yeah, maybe.
Thanks for that, Christophe. And which part of the market do you think really understands this? Huh? If you're, in my head, if you're an average retail customer, you've probably barely come across USDT, USDC, maybe DAI, and I doubt most people even think of any of these criteria. I'm thinking more sophisticated investors, traders might want to use different types of stablecoins now that you map it out so well, for different purposes, for different needs. Is that fair, do you think?
Yes, you're right. All of these examples, whatever the mechanism, are pegged to USD, for example. But there are also some stable coins that are pegged to commodities such as gold, creating new use cases if you want to protect against, for example, inflation of USD. Yeah, you also have some stablecoins that are pegged to other national currencies. So, for example, if you are a European citizen, maybe you would like to get, instead of USDT, to get some stablecoin pegged to euro, such as AG euro, for example. So this is very important as well. But as we have seen, the market is very concentrated, and most of the stablecoin are pegged to USD for now. But here again, I think that different use cases are going to push for diversification.
Okay, thanks, Christophe. So that's clear. You've painted a nice picture and helped us understand what that universe of stablecoins looks like. Help us understand how truly stable stablecoins are then. What the name would suggest they are designed for that, but is that the case all the time? I know we've had some deep eggs and some real accidents, so maybe you want to share some of these stories?
Yeah, that's a very good point. So people thinking about stablecoin have come to the stablecoin trilemma. This trilemma highlights the challenge of achieving three key objectives simultaneously. So these objectives are decentralization, scalability, and stability. And with the example here, with the DAI, for example, here, we can see that DAI has to make a trade-off on scalability to keep on decentralization and stability. And that's the case that DAI does not scale very well. And this might explain why the decentralized stablecoin do not have a big market share, especially if they are based on CDP. You also have the Luna, Terra Luna stablecoin here, which is an algorithmic stablecoin, and usually the algorithmic stablecoin are really struggling with stability, as you may have noticed. But they have a good, they are good on decentralization, and they are very scalable. But this can cause some kind of systemic risk, as we have seen with the collapse of the Terra Luna. And the centralized stablecoin are good for stability and scalability, but are not decentralized, and this can cause problems, as we have seen about transparency and censorship and this kind of thing. So yeah, this is usually how we conceptualize the differences between these three families of stablecoins.
That's interesting. We actually used an image like this for another conversation we had on this channel a while back on the blockchain trilemma, which uses
Yeah, exactly.
the same three pillars. So basically, you're suggesting that to be a if you're optimizing for decentralization and scalability, you're likely to compromise on stability. It happens.
Yeah, yes, that's the idea of this trilemma. This, as you have guessed, is inspired by the blockchain trilemma, where here stability is replacing security of the blockchain trilemma. So, yeah, if I come back to your question, how stable are stablecoin after all? We can have different risks associated with the different designs of stablecoin or the different family of stablecoin. For example, the centralized stablecoin are prone to the regulatory risk. For example, um, they also have they present third-party risk because the funds are usually placed in banks on banks' accounts, and also they are prone to the management risk. So depending on how they manage their assets, you can have insolvency of the stablecoin that will create a DPEG. I will give some example after that, but the idea is that each stablecoin has its own risk. The zero risk stablecoin does not exist. And yes, you're right. The main risk is usually the DPEG risk, which means that the stablecoin with value or price on the market will be below the price of the reference asset. So this was for the centralized stablecoin, but the decentralized stablecoin have also some challenges. For example, um, based on the exchange rate risk for the CDP based stablecoin, since they have reserves in Ether, for example, if it happens that the price of Ether is going to drop very fastly, it can be challenging for the protocol to remain sufficiently collateralized. And for algorithmic stablecoins, they usually face a very particular threat, which is a deflationary spiral, or what I also call it a spiral of mistrust, because the mistrust into the stablecoin is going to diminish the demand for the stablecoin, and then the protocol is going to issue new seigniorage shares, creating a dilution of the seigniorage shares, and this is going to nourish the spiral of mistrust, and it can go to the total collapse of the stablecoin, the algorithmic stablecoin.
Understood. Thank you. How about okay, you've outlined the advantages and drawbacks of each and different compromises, but do you want to share maybe some of the horror stories? What should investors look out for in terms of past incidents? Terra Luna is the obvious one, but maybe there are other subtle events that may have happened around depegging of stablecoins as well.
Yes, you're right. Historically, there was a lot of debates and problems. So, as I said, stablecoins are not risk-free. There are always risks, and these risks are different depending on the kind of stablecoin, on the mechanism underlying this stability. So in May 2022, there was the Terra Luna collapse. So I'm not going to go too much into that. But also 1 year ago, in March, there was a USDC DPEG. If you remember, it was related to the Silicon Valley Bank collapse. And Circle, the company issuing the USDC, had some reserves in the Silicon Valley Bank. Because of that, this created a DPEG of USDC. At the end, it was saved, in fact, by the intervention of the Fed. So this is kind of fun, if we can say that that the blockchain ecosystem was kind of saved by a centralized entity.
I recall the events, but I didn't quite realize this particular depeg happened because of that. So as Silicon Bank went down, Circle didn't have access to some of its reserves. Is that right?
Yeah, exactly. About 20% of its reserves were in the Silicon Valley Bank accounts, and because of that, the USDC depegged by about the same proportion.
Oh wow, okay.
So
Until I recall now, actually, Biden and there were public statements around no bank will fail, and there were.
Yeah, and then yes, they decided during the weekend that no bank will fail, that the deposits will be guaranteed, and because of that, the USDC repegged, recover its peg, but without this intervention of the American entities, financial entities, USDC would not have repegged so fast. So yeah. This was for USDC, so this illustrates the third-party risk that we were speaking about. But we have also seen some depeg for the CDP stablecoin. For DAI, I will quote two examples. In March 2020, due to the COVID-19 pandemic, the price of the Ether experienced a severe downturn. It lost almost 50% of its value in a very short time. And because of the liquidation mechanism of DAI, in fact, it happens that the price of the DAI, the stablecoin, went above its target price of $1. So this was not ideal if you want to protect your saving, to buy a stable coin that is designed to be pegged to $1 and to buy it at 1.05 or 1.10, as was the case at this time. The second episode regarding the DAI depeg is related to the USDC depeg that we just spoke about in March 2023. In fact, to improve its stability, its short-term stability, the price pegging, in fact, the DAI has set a mechanism that is called the PSM, for Price Stability Module. And because of this mechanism, you can swap at the protocol level some DAI for some other stablecoins, such as USDC. So this is fine as long as these other stablecoins are keeping the peg, but when the USDC depegged, because of that, the DAI also depegged a little bit. And so you can see that even for a decentralized stablecoin, there can be a kind of a contagion depending on the mechanism.
Interesting. Interesting. I hadn't quite realized that. So, all right, you mentioned a few examples now, but you didn't touch on USDT. Shall we cover on the elephant in the room now?
Yeah, but just before we go to USDT, just you asked for investors and what can be done. So once again, investors should be aware of existing risks, should understand this risk, and once more, I would say that diversification is the key for hedging. So diversification is the key, individually and collectively, but with a single stable coin that has such a huge market cap, such as USDT, it's pretty hard to have a real diversification at the collective level for now.
Yeah, I mean, that sounds reasonable. Diversification, I think, is quite natural to think about, and it's quite easy to understand. Although I must say, this isn't unique to stablecoins. Just navigating the crypto asset space with the appropriate risk warnings of what you're actually getting yourself into, regardless of whether you're talking about stablecoins, I find still very very premature or very immature in this market. It's very difficult for investors to really know what they're touching without becoming experts and putting significant amount of time, thought, expertise in digging through and trying to make sense of what is what. So you made it quite, we spent 40 plus minutes on stablecoins today to help paint that sort of map for this particular niche of the market. But it's still far from optimal, at least in my mind. Anyway, shall we move into USDT now? It's the biggest one. So what are the it's the elephant in the room. So what are your thoughts around its systematic or systemic risk, the dependency on the market on this particular stablecoin?
Yeah. So first, maybe I can recall what are, from my point of view, the reason of this dominance of USDT. I've already quoted some of them in the discussion, but I think the biggest one is the first mover advantage. So they came in 2014. They were the first stablecoin, so oldest actor in the place, and because of that, they have created a very strong network effect with big liquidity and volume. They are the stablecoin with the highest liquidity and the highest volume. You also have a broad acceptance. So every single DX, every single CX is going to accept USDT. And that is a very, very strong advantage for them. And also the market integration, which is the consequence of this broad acceptance. So because of that, we have this network effect. And also, as I already mentioned, there is kind of an historical tracking, what I would call the proof of survivance. They have proved, even if there were some controversies regarding the reserves, the transparency, the regulatory compliance. By the way, they are still there. There is a resilience, a proven resilience to crisis, and there is an operational continuity. So they have never stopped their operation. And I think that is also a very strong argument of why the USDT has this place. But as you mentioned, there are also some risk because of this position, but also because of their particular design, I would say. So because of the market position, they are creating a systemic risk for the whole ecosystem. If the USDT will collapse, that will be a bloodbath, I would say, for the whole ecosystem. That will be much worse than the collapse of Terra Luna, for example.
Or even FTX. I mean, this would bring the whole market down significantly.
Yeah. I think that will be very terrible, in fact. Also, more specifically to USDT, there was controversies, as I mentioned, about the opacity of reserves. So there are no external audits of their reserves. Big companies, big four auditors refuse to audit USDT. And so you just have kind of internal reporting from Tether saying, trust me, I own the reserve. And so, that is a problem. And of course, there is also this regulatory risk, while other centralized actors have clear regulatory compliance, such as USDC in the US. It's not the case for Tether. Okay, it's not very clear where they are, who they are, where they are located, and that is really strange for an actor that is so big in the ecosystem.
That's a fair point. I've recently noticed the S&P, the ratings agents, have issued ratings or an opinion on stablecoins, and Tether were marked down as I can't remember what the grading was, but they alluded to some of the lack of transparency you mentioned. Although in their defense, I keep hearing sort of, they keep publishing their reserves and their audits on their websites. That might not be sufficient, as you say, without an independent audit. Should we move on from here then? I mean, you touched on the regulatory risks as well. Maybe what's going on in the regulatory environment, regulatory developments. MiCA, for instance, coming in Europe, and what that will mean for stablecoins in Europe. Tether, for instance, how they're going to respond to the new needs to have a stablecoin in the European market.
Yeah, sure. So first, I would say that I am not myself a legal expert. Okay, just to make things clear, it's not a legal advice or whatever. We have three big, how do you say, legal regions, jurisdictions. Sorry.
Jurisdictions, yeah.
So we have three big jurisdictions with the US, Europe, and let's speak about Swiss, since we are in Swiss also. So for the US, there is still some big unclarity about the status of cryptocurrencies in general and about stablecoins in particular. There is still this unresolved question whether a stablecoin should be qualified as a security or not. And depending on that, you have a lot of juridical actions currently just on this point. And to add to complexity and to legal insecurity, let's say, diverse states have different regulations about that. So yeah, for the US it's very complex because of because the regulation is not set yet. It's still in debate. For the European Union, there was the MiCA 2, and soon MiCA 3, which is creating a full framework for regulation in the European Union. It's a regulation that is pretty hard, let's say, with expensive requirements, especially for stablecoin issuers. But it has the merit of clarity. One of its goals is also to enhance the consumer protection, which is pretty good. So for Europe, I would say the regulation has the merit of existing, of clarifying things, because it's very difficult. It creates entry barriers. So that could be a bad thing for innovation, I would say, but maybe for security, stabilization, and legal security for an institutional adoption. I think it's very important. In Swiss, we have a regulation existing since several years already. Stablecoin will be classified differently based on their use cases, where there are many payment tokens or asset token or hybrid token, mixing that. Depending on that, you could have some licensing requirements. So if you allow some kind of deposits with yields, maybe you will have to get a banking license. And the Swiss regulation mainly focus on AML, anti laundering money. Sorry.
Yeah, anti-money laundering.
And KYC and the KYC, know your customer legislation regulation. In Switzerland, so we have this more liberal approach, and I think this can really drive innovation. This is what I think.
Yeah. Do you think there is a regulatory case for the banning of stablecoins? I'm thinking of the US, for instance. I mean, do you see there a valid argument for stablecoins to be banned? I don't know, in favor of CBDCs, for instance?
Yeah. CBDC will be a real game changer. We will see how it goes. For now, the CBDC are not really in production. Let's say they're still in development. We'll see how it goes. But in Europe, with MiCA, stablecoin sector is becoming regulated. So some actors will emerge in this framework. In the US, as I said, it's still very blurry. But yeah, there is a risk that the CBDC will change the landscape of stablecoin. Regulators might impose stricter rules on private stablecoins to avoid competition with CBDC. I can see that. I imagine that they will not allow private dollars, for example, for the US government, if they are issuing their own CBDC.
Yeah.
And personally, I am very concerned by CBDCs, or the central bank digital currency, as I already mentioned, for privacy issues, censorship vulnerability, custodiality, where the government will be in charge of keeping your money somehow. This is not something that I want for my future.
Yeah, that's clear. So let's finish off, Christophe, with your vision. How do you see the market developing? You explained us the market, the taxonomy, the types of stables we have out there, compared and contrasted them, gave us a bit of a regulatory flavor. Where do you think this market is going to develop from here?
So, as I just mentioned, CBDC could become a big thing in the next year, and they will pose not only a regulatory pressure, but maybe also a mediatic pressure over private stablecoin to avoid competition. So I guess the CBDC will start to integrate the DeFi ecosystem.
Mm-hmm.
Also, I see in the future that the USD position will continue to be challenged in the global monetary system because of the emergence of the BRICS, because of the inflation related to the quantitative easing, and because of this challenge in the global monetary system, I think there will be challenge also in the blockchain ecosystem. We'll see how it goes, but their position as a cornerstone of DeFi could be challenged in the upcoming years. I guess that we'll continue to see some deep eggs. Hopefully not a too big black swan, but it cannot be totally excluded. We'll see. And I really think that decentralization and privacy for stablecoin will be required for mass adoption and will become really points of interest.
So you think we'll finally start seeing antagonists to the centralized and stablecoins and Tether in particular? If you were to sort of imagine the market in 5 years from now, you'd expect it to be significantly less?
I expect more diversity in the field. Yeah, more and more diversity.
Great. Christophe, we've managed to speak an hour about stablecoins and not have a mention on CyberGold. We will have a dedicated episode to explore exactly what you're doing in this space, but maybe do you want to share sort of a teaser, a helicopter view of what you're working at, so that any viewers can sort of mark their diaries for the next deep dive into what you're working on?
Yeah, okay. So as a takeaway, as you have seen, stablecoin are not the boring stuff that people imagine. It's a field full of dynamic innovation, technical innovation. It's very dynamic with regulatory evolution, technical evolution. zero risk stablecoin does not exist. There are always risks that people need to understand. And at CyberGold, we are working on a decentralized and gold-pegged stablecoin because I think that the reflection on stablecoin cannot be totally separated from a reflection on monetary system. And because of the challenge to the USD position in the global monetary system, there is this reflection to return to a gold standard. And this is why we are building CyberGold, and what we think that CyberGold is will be an answer to a question that for now not a lot of people are asking. But yeah.
Thank you. I know I've had a sneak preview of what you're up to, having attended one of your seminars last month. So I'm excited to have a deep dive on the topic. Let's do that in the next few weeks and dive in. So from my side, Christophe, has been really interesting exploring this space. You've made it very clear, painting again a picture over the whole stablecoin space. So big thank you to you. Here are your details on the screen in terms of how we can get hold of Christophe if you want to reach out. And as I mentioned, keep an eye out on this channel. We'll have a deep dive coming soon. So again, Christophe, huge thanks. It's been a blast. I really enjoyed the conversation.
Thank you, Francisco. That was great.
Fantastic. See you on the next one.
See you. Bye.
I hope you enjoyed our video. If you found the video informative, please don't forget to follow our channel and click the alarm button to be informed of new videos coming through. There is plenty to learn and get your head around on your journey to mastering crypto. Thanks for watching, and see you on our next video.